So there's war breaking out in the Ukraine, but what does all that mean for the UK property prices, certain housing markets, inflation, building materials, mortgages, etc.? What does that mean for you guys as property investors? We're here today filming Property Elevator Series 4. I'm just taking a break out to share with you my thoughts on this unfolding crisis and what it means for you guys. That's all coming up in this video. I'll also take you behind the scenes of Property Elevator Series 4 to show you what's happening and what happens on these shooting days. So stay tuned, there's a lot in this video. My name is Ranjan Bhattacharya. If you're new to this channel, make sure you subscribe, hit the bell icon. We put out new content all the time, and it's all dedicated to keeping you on top of your property investing game. So there is this unfolding crisis in the Ukraine, and of course our first thoughts are with the humanitarian issue that's out there and the real issues of war. But of course, as property investors, you're going to be wondering whether it has an impact on you and what you're doing over here in the UK, in the world of property investing and developing. So there are a number of ways in which what's happening over in the Ukraine will affect us in the UK. I think the first thing is going to be inflation. As you know from my previous videos, I predicted inflation with all this quantitative easing that's gone on, and it's running, the headline rate is 5%, but we all know it's a little bit higher than that. Now the issue is it's going to be even higher, and that's because of energy. The fact that energy prices are going up and so much of our energy is dependent on Russian supply, and sanctions are not going to help that too much. So it's not as though we're doing tons of trade with Russia in terms of goods and services. It's mainly the energy. And of course, energy, the cost of energy feeds into everything that we produce. So expect inflationary pressures there to be much higher than it would have been had this crisis not unfolded. And that, of course, feeds into the cost of everything that we do, particularly building materials. But I'll talk a little bit more about building materials later. When there's inflation, of course, the way central banks like to put a lid on that is by raising interest rates. Now, the thing that's happening now is that this increase in energy costs is going to affect everyone, meaning everyone in all countries. So we're going to find a response by many central banks will be to increase interest rates a little bit. But they're not going to be too bold with that because, of course, increasing rates too much is going to cause a recession. So it's a fine balance. And of course, when interest rates go up, that will have an effect on mortgage rates and affordability and the property market and property prices. By the way, if you're enjoying this video, make sure you smash that like button. It means more people get to see this video. And don't forget to subscribe as well. So mortgage rates are going to head up a little bit in light of obviously interest rates rising. So if you're looking at remortgaging, I would certainly look at bringing forward those decisions and look at 5-year fixed rate money to secure the current low rates for as long as you possibly can. So 90% of the housing market is driven by owner-occupiers, people looking for a home to live in. Not even 10% is investors. So we have to look at what drives the housing market for other people looking for a place to live in. Now, when you're looking for a place to live in, a lot of people get a mortgage. Mortgages, what you can borrow, a key determinator is affordability. It used to be very, very dependent on income multiples, but now it's switched more towards affordability. Now, the key issue with affordability is, of course, how much it costs to buy your stuff that you need to sustain your life. With energy prices increasing, inflation going up anyway, the affordability, meaning the disposable income that people have at the end of every month, is going to be a little bit squeezed, and that will affect the amount that people will be able to borrow, and therefore the loans that they'll be able to get for mortgages, and that will affect the amount prices can actually go up. Now, we have in the UK a massive supply-demand imbalance, which ain't going anywhere soon. And I don't think we are going to see a fall in prices. I mean, a fall in real house prices in the UK. What we're going to see is that the growth that we would have had, the growth that I was predicting pre this Ukraine crisis, simply will not happen. We'll see growth rates at near zero. And that would be primarily because of mortgage affordability. And of course, rising interest rates and rising mortgage costs mean that that also squeezes affordability as well. Now let's have a look at the impact on developers. Now, in times of uncertainty, of course, stock market starts to get a bit choppy, and that's happened. But there's a certain amount of unusual activity when you look at UK house building stocks. Now, UK house builders, of course, build new build properties, and they work with very, very long timescales to get things done. So one of the issues that they have, of course, if they've land banked some land to build 100 new houses, they've been doing all their cost models on previous building material costs. Building material costs have risen quite a lot over the last year, and with this Russia crisis, they're going to rise even more. So that's going to affect the profitability of some of the sites that the house builders have land banked, which of course is now feeding into their share price, as you can see on the stock market. Personally, I think that's a big indicator for you guys. I wouldn't be thinking about doing new builds right now. New builds are hugely risky. Why? Because if you want to do a new build, well, you buy the land, you spend ages getting planning permission, then the build out is quite a long time. And what do you base your building cost models on? If I'm buying something today, I need to accurately be able to estimate what my building costs are into the future. With prices going up at such a rate, I've got no idea what my building material costs are going to be in 1 year's time. So that's why I feel doing new build projects are so risky, and I think that's evident by what's happening with the prices on the stock market of house builders. So what should you guys do instead? Well, I've been a big advocate of permitted development projects. Now, the reason why those are so suited to times like this is that when you do permitted development, you're basically converting existing buildings into a new use. Now, that is the key. With permitted development, the planning process is far quicker and is far more definite. And the other thing is, when you actually get the planning permission, the time it will take to build the thing out is far quicker, because you're converting a building that's already exists. The foundations, the walls, the roofs, the windows, already there. You're reconfiguring the internal layout of the property to a new use. So therefore, when you're planning a project, the time it actually takes to get to the stage where you're buying building materials is relatively quick, which means you can plan for a modest rise within a realistic project timeline much more better than a new build project when your timescales and timelines are so uncertain. Now, I run some special workshops, 90 minutes worth of free training on how to get started with permitted development and converting commercial buildings to residential use, which is, I believe, is the optimum strategy for right now. We'll leave a link in the description and on the screen. You can get on one of those sessions. It's absolutely free, and we'll get you started on that journey. Of course, the long-term prospects for UK property prices are very, very good. What I'm talking about is short-termism. In particular, while there's a little bit of uncertainty right now, we're going to see the growth rate come right down pretty much to zero, but not a real fall in prices. Now, what about individual property markets? Now, according to the Times newspaper, 80,000 Russian citizens own UK properties. So sanctions may affect a lot of these guys, but I believe that a lot of these 80,000 people are individuals just buying their own home opposite Harrods type of thing. There is a lot of Russian money in the UK, but a lot of that money is investing in build-to-rent type projects, student housing projects, and they're all done through offshore entities where the ultimate beneficial owner is a little bit more masked. So those will be largely unaffected. The other thing to take into account is that many people have come from Russia and now become British citizens. So those folks and their investments will not be likely to be affected. So personally, I feel of the 80,000 people that do have property here, a lot of the high-profile people may be kind of targeted, if you like, as part of this sanctions regime. New people will find it hard to invest here in the future if they've got money from sort of Russian origin. But as far as a bunch of the existing investments, I think they'll be much harder to touch than the rhetoric might have you believe. And of course, the funds and things supported by Russian money, they're investing in sort of bigger sort of investment projects, as I said, build-to-rent, student housing. There's a little bit of individual money in prime central London, but a lot of those properties are bought without mortgages, and it's a different kind of market, that Zone 1 prime London, which is kind of separate from the rest of the UK anyway. So I don't really see the Russian investors in the UK property market as having a big effect on the mainstream property market that folks like you and I invest in. So in a minute, I'll give you a quick tour of the property elevator set, but let me just finish this up with some tips, if you like, of how to manage your finances and investing decisions over this period of a little bit of uncertainty. If you're looking at remortgaging existing properties, bring forward those decisions, seriously consider locking into 5-year fixed rates. look at discretionary spending, keep that under control so that your affordability when you're being assessed for new loans is there and nice and clear. Look at wealth building investments, such as building equity in every deal that you do. Things like commercial conversions of properties to residential use is great. You do it under permitted development, it's quick time horizon, and it's less cost to actually do the build out. So look at those sort of strategies as a way of what to do in these times. Also look at your contingencies, build in a liquidity reserve so that you can deal with issues such as rising material costs so that you do get your projects finished. So that's it for this update. Remember to smash that like button, also subscribe, hit the bell icon so you're notified when we upload new videos. Now I'm going to go back to where we're just getting ready to shoot today's property elevator. We've got 3 days of filming. If you come with me, I'll take you around what we got in there. Right, okay, come along. This is where we're doing today's filming. Let's have a look inside. So this is where it all happens. The angels sit over here, and people that come in to pitch will be up here. Their deal will be presented on the screen. This is Michael. Let's just say hello to Michael. Michael.
Hello.
So how many people have we got on this series?
About 20 in the moment.
20 people pitching over 3 days, and all big variety of deals, is it?
Lots of deals.
You can't really tell us, can you?
Not really. Different size, different ideas. It's good variety. Yeah.
That's good. We obviously we know nothing about who's pitching. They're going to come over this 3 days, and basically many of these people are going to walk away with funding for their property projects.
We hope so. Yeah.
Any differences you noticed in this series?
As always, the standard of the deals is very good. Potentially a little bit bigger. I've worked it out. There's about £24 million worth of funding requests.
Oh wow!
This
Wow.
year. So yeah, it's going to be good.
Oh, that'd be really, really exciting. Okay, brilliant. When's this going out on the telly again?
It will be roughly 6 weeks' time, I'd say.
Oh, right. Okay, brilliant.
Yeah, perfect. Thank you, Ryan.
I'll leave Michael to set up. Let's just join some of my fellow angels. Hi, guys. So we're waiting to... we haven't started filming yet, so we're just getting ready for the...
Some of us are ready.
John, of course, very vocal. Nicholas, Helen.
Vocal.
What are you looking forward to, guys?
Great deals. Some great deals.
Lunch.
He's always thinking about his stomach, but if you look at the size of him, you can see why. So, but some of us are in fighting mode, aren't we, Helen? We've been waiting ages to start.
Totally.
And we're raring to go.
We are. There's going to be a lot of banter, I think. It's
Yeah.
Good fun day.
Ranjan's let himself down again with no tie, of course.
Well, this is the new look. I mean, let me know what you think, in the description below.
They've arrived.
Right, that's my cue to get ready.
That's your cue to get changed.
Okay, so Helen and I have got to go into hair and makeup now, and see you guys in the next video. Let us know what you think in the comments below. Bye for now. High streets across the land are changing forever. Basically, there's an oversupply of retail premises. Shops are closing down, more are going to close down in the future. The government know this, and that's why they're introducing a light touch planning system which allows small developers to easily repurpose these buildings to residential use under a light touch planning regime called permitted development. Now, this is going to be the biggest revolution and the biggest change and the biggest opportunity for property investors that I've ever seen. And this is all coming into effect on 1st of August. So you need to know what's happening and what properties to look for to take advantage of these opportunities so that you can get in there and take that first mover advantage. I've got a 90-minute free masterclass to get you ready for August the 1st. Make sure you join me, click the link below. Whether you're a beginner or expert, we'll get you started.